Ladies and gentlemen, good day and welcome to NIIT Limited Q2 and FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vijay Thadani, Vice Chairman and Managing Director. Thank you, and over to you, Mr. Thadani.
Thank you. Good afternoon. Good afternoon, everyone, and welcome to NIIT Limited Q2 FY26 earnings call. I know it's a busy time of the year, and there are multiple companies that you are tracking. And for you to have decided to give your time to us and listen to us, we truly appreciate that. And I will therefore now straight away get into the meat of the call. We have the main agenda point is to talk about the Q2 performance and the key developments. The second is also to talk about certain specific structuring actions that have been taken or reorganization actions that have been initiated during the quarter, and we will be talking about that. I have with me Mr. Pankaj Athar, our CEO, as well as Mr. Sanjeev Bansal, our CFO, our management team, Kapil Saurabh, our investor relations, Mr. Sapnesh Lala, our non-executive director, our CHRO, Ms. Meeta, as well as other directors on the call, as well as present with us here. Our purpose will be to give you a quick brief and then open the floor for questions and try to use the maximum time to answer your questions. While Pankaj will give you a detailed brief, let me just set the context. The context is, in simple terms, operating environment remains volatile with mixed or weak hiring across tech and BFSI sectors. There are certain cuts in onboarding. There are elongated decisions at client end on training. Despite this backdrop, we have stayed the course on our planned acceleration in investments across platforms, products, people, partnerships, and brands, and to position NIIT for durable growth. Our order intake has strengthened for the second consecutive year. Pankaj will take us through Pankaj will take us through that. We are seeing sustained consumption on this segment, as well as the demand from India enterprises. And overall, there has been a very decent revenue growth, YOY as well as QOQ. The only other thing I would like to mention is our revenue growth is on the upper end of the band in which we had guided at the end of last quarter. So Pankaj will take us through these details. I will not spend more time on that, other than the fact that IMNEO, our new addition to the family, has also delivered a very strong first full quarter as a part of NIIT. And as I mentioned, NIIT has launched a scheme of amalgamation for merging RPS Consulting and IFPI into NIIT Limited, which is going to take about 8 to 12 months to conclude. And that will have an impact on the simplified, more agile organizations, which should help us address the needs of our customers better. So I'll hand over to Pankaj to walk us through the quarter, as well as take us through the details of some of these activities, after which we will open the floor for questions. Over to you.
Thank you, Vijay, and good afternoon, everyone. I will read out the Q2 results, like Vijay said, with a brief update, and we will then open up for questions. I will also ask Sanjeev to step in where they said, as we read out the results. The order intake for Q2 ended with 1,454 million, which was up 14% year-on-year and 37% quarter-on-quarter. As Vijay said, we delivered results at the top end of our guidance that we we gave at the end of Q1. Revenue for Q2 was 1,049 million, which is up 16% YOY and 25% QOQ. This includes 111 million from IMU. Ex-IMU, the organic revenue grew 3.5% YOY and 19% QOQ. As stated earlier, the business is in development phase, and we are investing in scaling to capitalize on our early mover AI advantage, as well as to gain market share. In Q2, we continued planned investments in AI, platform, product, and brand. These are strengthening competitiveness, which is visible in OI momentum despite the volatile environment. EBITDA came in marginally positive at rupees 13 million versus expectation of negative EBITDA at the start of the quarter. This is versus 21 million last year and negative 62 million last quarter. Depreciation was rupees 73 million versus 67 million last quarter and 57 million last year. Net other income was rupees 82 million versus 179 million last quarter, primarily comprising treasury income of rupees 85 million. The decline quarter-on-quarter primarily reflects mark-to-market loss on the fixed income investments due to volatility in interest rates. Profit after tax for the quarter was rupees 14 million, giving an EPS of rupees 0.1. Vijay also talked about IMU having joined with us, and they spent their first full quarter, and these are the results. So first full quarter of consolidation for IMU. As you know, IMU is our AI-powered deep skilling SaaS platform. The business achieved strong operating income and contract extensions with key clients during the quarter. We expect IMU to catalyze growth, open higher ed channels, and enhance our AI-first deep skilling stack, which includes offerings like coding labs, assessments, placement automation, and talent acquisition. Now let's get into the operating details. In terms of order intake, the Q2 order intake was 1,454 million, 1,454 million versus 1,274 million last year and 1,065 million last quarter. At an enterprise level, the order intake was 850 million, and at a consumer level, the order intake was 604 million. Like-for-like order intake was plus 3% year-on-year and 59% quarter-on-quarter, that's excluding IMU. The momentum from accelerated sales and marketing and broader go-to-market is visible in the order intake and pipeline. Banking is seeing impact of soft hiring, while investments in broad-based customers set in the tech which drove growth for us. In terms of business mix, enterprise revenue was 703 million, which is up 10% year-on-year and 22% quarter-on-quarter. Consumer revenue was 347 million, which is up 29% year-on-year and 30% quarter-on-quarter. The mix is now 67:33, enterprise to consumer. Right? In terms of product mix, technology programs revenue 761 million, which is up 31% YOY and 30% QOQ. BFSI and others revenue 288 million, which is down 12% YOY and up 14% QOQ. The tech is to BFSI ratio is at 73:27 versus 64:36 last year. At this point, I'd like to call Sanjeev in to talk us through balance sheet and cash flow. Sanjeev, over to you.
Thank you, Pankaj, and good afternoon, everyone. On the balance sheet side, we are managing the DSO days. We are having DSO days at 55 days versus 56 days last year, same quarter, and 53 days in the last quarter. QOQ increase is seasonal uptake aligned to the stronger QOQ revenue growth. CapEx is 69 million in Q2, consistent with the investment cycle which we have. Cash and cash equivalents are at 6,846 million at the end of the quarter, which was 7,115 million last quarter. So we are having the cash flow down primarily due to payment of dividend, which is 136 million, and investment in IMU, 101 million during the quarter. Over to you, Pankaj.
Thank you, Sanjeev. Now let's get a little bit into the sector commentary. So GSIs and GCCs were both reasonably strong for us in Q2. they have been investing in upskilling and reskilling their working professionals. The marginal increase in hiring added to the improved consumption, resulting in a strong QOQ OI and revenue growth for us, even as discretionary spending continues to be constrained. The India enterprise segment grew on higher demand across automotive and other sectors. In BFSI, a risk-off stance, elevated credit deposit ratios, emerging retail stress, and lower attrition drove preference in hiring and onboarding. This remains a top sector for us in the last quarter. An update on the kind of investments and efforts. Go-to-market and brand. Expanded sales coverage across GCCs, banks, NBFCs, India enterprise, and with IMEO added to the fold, universities and colleges. Stepped up our brand visibility and influencer-led campaigns. Platform and products. Revamped learning platform launched deep skilling in new age tech, integrated agentic AI to enhance learner outcomes and improve internal productivity. Our solutions added generative and agentic AI support, including digital coaching for banks and enterprises, specific sector solutions for auto, telecom, consumer electronics. OEM partnerships, which are now 37, are strengthening our core sell and early access to technology. IMEO, which was closed last quarter, brings an AI for deep skilling platform in your web and opens the higher education channel. A strong strategic fit with clear synergy, which strengthens our reach into the universities and college segment. In terms of new customers, we've added 18 new logos in the quarter across BFSI and technology. BFSI others and technology, also across IMEO. Right. Let's look at the road ahead. We see a sustained trend of improved consumption of our differentiated and outcome-oriented products across the tech landscape, including working professionals and freshers. Our investment thesis is playing out. Order intake, new logos, digital engagement, and pipeline are all trending positively. While we see sustained momentum in the tech and India enterprise segment, we continue to see some hesitation in BFSI in the near term. Overall momentum has continued into Q3 and we expect stronger in H2, in the second half. Right? So, in terms of guidance, for Q3 FY26, we stay with a guidance of growth at 15 to 18% quarter on quarter. Q3 margin, low single digits, given that we are still in the investment phase and will continue to make those investments. FY26 full year revenue plus 15 to 20% year on year, subject to macro not worsening in H2. We will reassess quarterly given the fluid environment. Medium to long term substantial opportunity. We remain fully committed to our strategic objectives. Our long term potential remains high. We are a trusted brand with 200 plus active corporate customers and greater than 90% of our revenue coming from repeat business. We have a differentiated deep skilling methodology delivered on a scalable AI-powered platform with proven outcomes. 37 OEM partnerships gives us early access to cutting-edge technology. A strong balance sheet enabling continued investment in innovation and growth. Focused entity brings us more agile and positioned to compound through cycles. Vijay, back to you.
All right. So, as Pankaj has pointed out, I think we've had a very good quarter in terms of the returns that we made on investments in the previous few quarters as Pankaj has been briefing us. I think the increase, the larger sales force and the larger number of sales and marketing efforts on one hand, investments made on platform as well as in the product portfolio or offering portfolio that we have. And I think all this has resulted in a strong order intake. Maybe we should try to give you a color of the kind of work that we have been doing before we open it for questions. I'll actually take a pause and see if there are any questions at this point of time before we proceed further.
Speakers, should I go ahead with the questions?
Yeah, go ahead, and we can even summarize this later in the end.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Rahul Jain with Dolat Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. If I heard you right, you mentioned the organic growth of 3.5% for the quarter. It would be great if you could repeat that number. What was the precise IMU contribution and organic growth?
Okay. No. He's saying what was the organic growth and what was
IMU, I think, it's 111 revenue. And without IMU, we were 939 million revenue, which is 3%, 3.5%.
Organic to organic.
Like to like, 3.5%. YOY and 19% growth.
Hello.
Now, was that your question?
Actually, at least to me, you are sounding pretty distant. I could not hear that number.
Speakers, can you come a little closer to the mic and speak? Thank you.
We are exactly where we were and we can't come closer to the mic. But let me try to be louder. Try to be louder. So, now, the IMU revenue for last quarter was 111. And
okay.
NIIT organic without IMU was 939. Right? So NIIT organic like-for-like growth was 3.5% YOY and 19% QOQ.
Got it.
So we have had a rebound of from growth from the loss of growth that we had last time. We had orders, but we could not execute. So this quarter we could execute some of those, and I think that's visible in the QOQ performance that you see.
Right. Also, during the quarter, we made this announcement around the reorg, simplifying the structure, the subsidiary structure, post some of these minority purchase. So, if you could articulate your thought process that what exactly you're trying to align, what could be the benefit for us in terms of cost or any other dynamics that you intend to do as part of this effort?
Okay. So let me attempt that. So first, I think in the month of June, we announced that we are buying over the stake of ICICI Bank in the joint venture we had, which was NIIT Institute of Finance, Banking, Insurance and Insurance Trading, NIIT Limited. That stake was bought because of strategic considerations. This joint venture has been on for about 8 years. There were certain regulatory calls that ICICI Bank had to take, and the joint venture's purpose was to make sure that we get the benefit of the know-how which ICICI Bank had in BFSI, and now that we were fully launched and our arrangements are working well, we felt that as a small entity to have one more entity under it may not be a more productive way of having it working together. And at that time, ICICI also wanted to sell their stake in the joint venture because of certain of their issues, and that's why we first bought the equity out, after which IFBI became a 100% subsidiary. On the other hand, RPS Consulting, which we had acquired in 2021, had finished its earn-out period and all other considerations and was also a 100% subsidiary. Overall size of the company is 450 odd crores, and we felt that having two subsidiaries within it is not the most efficient way of working, and there is also an opportunity for the teams to work together for higher degree of agility, as well as working together, synergy and energy, agility. That is what led us to this decision, and we have now applied for a merger of these three entities, which will be beneficial to everyone, to our customers. They are now dealing with a company. Each of the companies, the sum of the three companies is larger than any one of them, and therefore they're dealing with a stronger balance sheet, larger workforce, access to the full product and offerings line as well as management team. And it's very good for each of the people who are engaged in it, because they all are part of the overall NIIT system. It's very good for NIIT because NIIT size increases. It's good for shareholders because simplicity of operation and agility will only contribute to faster growth, and it creates clarity and direction in the organization. I think these are some of the many benefits that we see, and that's how we are going ahead with it. The team has been filed. The team has been. Yeah, you had a follow-up question.
No, sure. I was just saying, is there also any cost saving? And also there was one exceptional item of 23.8 million. Is it related to this exercise, or if not, then why? Thanks.
No. I think those are two different issues altogether. So first of all, there will be cost savings. I mean, there is, however small or large that might be, there is a cost of running a company and having multiple KMPs and stuff like that. So all that will, I think, get heavily simplified. There is also money. There are intercompany transactions, so therefore money gets locked in TDSs and stuff like that, which will all get simplified. And I don't think there is any cost other than the cost of going through the exercise which is built into this. The special exceptional part that you are talking about is actually relating to, if I'm not mistaken, Sanjeev Bansal is here, he'll clarify again, is relating to a severance cost of one of the step-down subsidiaries in China, which the center was closed, and that was according to the arrangement. And to that extent, I think there was a severance cost charge which was taken below the line, as per the law of the land.
Got it. And just one bit on the business side of it, is there any newer initiative from a segment that we want to get into? I'm more trying to understand from a manufacturing side opportunities as well, because that is where the more jobs are getting created versus more reliant on the services side. So are there initiatives on those sides? Thank you.
I think Pankaj has some grand plans. He will share some of those.
Thanks, Rahul, for the question. So we do have plans. So like I mentioned in the briefing, we did see new customers from the India enterprise segment, which include manufacturing companies, automobiles, and other manufacturing companies. So we are seeing opportunities there. Besides that, we are also seeing opportunities in the EV space, and we are gearing up to address that opportunity as well. We have recently strengthened our team and capability for that space. And over the next half of the year, we will be approaching the EV space with more focus from both product and sales point of view. We are also focused on cyber security, which is as data centers are proliferating because of AI, we are seeing a lot of opportunity for cyber security as well in the market, and we are refocusing on that space and building capabilities there. So these are the new segments that we are going to approach over the next half of the year and further after that.
Sure. That's it from my side. I'll fall back in the queue. Thank you.
Thank you. Next question comes from the line of Faisal Hawa with HG Hawa. Please go ahead.
Are we doing any progress on creating self-employment opportunities for most people who are in the software and programming industry, as a lot of this freelancing could also take place? And are we thinking in terms of those opportunities also? And can you tell us as to how this overall learning software over YouTube or AI will actually affect our business? And can we have some kind of a collaboration where we teach the software professionals higher kind of software which just now most people are not trained for? And how is our advertising campaign that we initiated on YouTube doing? Do we have any traction because of that?
You asked many questions in one. So,
let's try and rephrase this question. So his first was retraining people to become self-sufficient in software.
Yeah, or whatever you are doing to upskill, reskill software. So the software profession.
Yeah. Second was how is AI impacting the whole training area, and third,
The second was, how is this new acquisition, your AI-powered platform, what is its role, its own role, first of all, what does it do, and are there possibilities of working together and creating a larger opportunity? Did I understand you right?
Yes, sir.
All right, cool. Go ahead.
And the third was
The voice is very muffled. It could be because voice is very muffled. It could be because three people are sitting in the same room, so it's becoming very difficult to understand the answers.
Okay. So no, I don't think it is a problem of there is some problem with this transmission system or wherever.
Because the moderator's voice is coming extremely clear.
Just because moderator is not sitting in the room, he is sitting in his center. So the problem is between us and his center somewhere.
We will try to make the best of the situation.
No. So tell me one thing. Are you able to hear me well? Are you able to hear me well?
I can hear you, but it is extremely difficult to really understand or even hear. But we will try to make the best of the situation, sir.
Okay.
Please answer.
So let me go ahead and try to answer. I'll try to speak a little louder and slower maybe, if that helps. So your first question was on retraining working professionals. So there are two ways that we are able to approach that. One is if a corporate or an enterprise wants to retrain its workforce, right? So that is approached through our enterprise business. And we have seen some of those opportunities with large GSIs coming to us for retraining, reskilling their workforce. And we have serviced those opportunities both in Q1 and Q2. The other side is through the consumer business, where people want to retrain themselves. Right? So there we offer skill-specific programs. So you could do a program on Python coding or machine learning, data science, right? So these are skills that are in demand right now, and you could skill yourself using our program and understand how to become a valued person in the data science field or the machine learning field or AI-related field, and then either get self-employed or work with a corporate from there. Right? So that is how we are addressing the opportunities of reskilling in the current environment. Your second question, which is, sorry, were you trying to say something, sir? Okay, I'll answer the second question, the first part of the second question, which is about what does our acquisition, the AI-powered SaaS platform do. So they work with both universities, colleges, and enterprises. The bulk of their business is to help computer science engineers to become better coders, right? And by providing an environment for doing a lot of coding practice, which is then evaluated by an AI system, which gives them feedback and helps them become better at their craft, right? And the same service from a different angle is used by enterprises to evaluate people that they want to hire or to train the people that they have recently hired, right? So this is their core offering. In terms of synergy, definitely it creates opportunities for us. We have our direct-to-consumer business, which addresses a similar or an overlapping customer base as the acquisition has, right? So there is an opportunity to sell more services to the same customer base. And of course, we have a large enterprise presence, and it is an opportunity for NIIT to sell their services to our enterprise base. So in both of those directions, there is a lot of opportunity for synergy that could get unlocked over the next few quarters with the acquisition. And your third question was on YouTube campaigns. So actually in the last quarter, we did have a YouTube campaign we launched for NIIT program, which is our flagship training program in our direct-to-consumer space. And we saw a lot of success with that marketing initiative. We had views in the millions within the first few days of launching those campaigns on both YouTube and Instagram, which led to a surge in traffic to our website and consequently into conversions as well. So we did see a positive impact, and we are following through on that. In terms of our own YouTube channel, in the last 6 months, we've been focusing on that, and in the last quarter, for the first time, we crossed 50,000 subscribers. It's a very small number still, but it's a focused effort on our YouTube channel as well. I hope that answers your question, sir.
Sir, one more thing is that can you give a figure as to the top 5 courses that contribute to our revenue? Have we taken any price increases in the last financial year in those top 5 courses? That is one. And secondly, sir, can you also enumerate as to how many new courses we have added in the last financial years to our total offering? And third is, sir, we have a large cash balance or investments in our balance sheet. Do we propose to use it for any kind of buybacks or a large dividend?
Okay, since your questions come in now half a dozen each at a time, let me answer the last one, which I know. The money that we have in our books, it is a stated policy that we have kept it for growth, both organic and inorganic. You saw we recently made an acquisition, and that acquisition has a run-out structure, and from that we have paid for part of that acquisition during last quarter also. Even though the acquisition is small compared to what we normally prefer, we have an active pipeline of inorganic opportunities, and as and when they materialize, we will be sharing that with you. As far as distribution of that amount to the shareholders, either as a buyback or dividend, I think it's a proposal that is something that we can talk to our board as we go along. But from the initial stated policy, the reason to keep that money in the books was to invest it in growth, given the strong opportunity that the company has. And the fact is that that opportunity is materializing also, as you can see from this quarter's results. The other two parts, I'll ask Pankaj to answer.
Yeah, your other question was, which are the best-selling programs and what we've launched in the last year. So in terms of best-selling programs, right now, they would be data science, machine learning, digital marketing, and NIIT, right? And in terms of what we launched, we relaunched NIIT within the last year, and we also upgraded all of these programs. So data science has been a best-selling program for the last 3 years maybe, but every year we upgrade it with whatever new comes out from a technology perspective, and we update the program, which is true of digital marketing and machine learning as well. And we are launching AI-related programs also in the near future. We currently have machine learning programs, but we are launching something that is very directly AI as well.
Sir, can you give us a figure whether we have taken any price increases on any of our courses in the last financial year?
Whether we've taken price increases in any of the courses?
No, I think these are different courses, so I don't think there is a standard escalation thing. I have a feeling you're coming from a past when the same course would be valid for a few years, so every year we would look at whether there's an escalation. Nowadays, the shelf life of a course is much shorter, and to that extent, I think how you recollect, you repackage them, you combine them, because the needs of the industry are also changing. So I don't think there's any, should I say, stated policy of escalation or restatement of fee.
Yeah, in fact, if you look at how NIIT is, it is built in multiple stacks, and you can do one stack or more stacks and combine them in whichever way you want to as a learner. And therefore, it is more about what you're going to learn, when and how, than just the fee part of it.
Okay. Thank you very much, sir. I'll come back into the queue for more questions.
Thank you.
Thank you.
Thank you. The next question comes from the line of Aman Prakash, an individual investor. Please go ahead.
Hi, thanks for giving me the opportunity. I just wanted to ask, as a tech participant, I see a tremendous, shortage of talent in the AI industry in India. So what are the steps NIIT has already taken, or in which direction can this go? Because this will remain there for a while, right? So I just wanted to know, any scope for any B2B partnerships with any of the existing companies that are there in the market. Thanks.
So this is exactly what we do. Sorry, I didn't get your name.
Sorry?
Okay. So Aman, Aman, this is exactly what our direct consumer business addresses, the shortage of tech talent in the country. So we have tied up with more than 200 organizations actively where our students get placed and enter the tech industry. So our main proposition is to help students bridge the gap between formal education and what the industry needs, and that is what we provide. And we also help them get placed, actively working with companies to help them recruit students from our courses.
Mr. Prakash, please go ahead with your question.
Yeah, that was the only question that I had. Thanks.
Thank you.
Thanks, Prakash.
Next question comes from the line of Ganesh Shetty, an individual investor. Please go ahead.
Sir, I appreciate your efforts in tough as macroeconomic conditions. Sir, I just have one suggestion or recommendation that whether we are approaching any PSU companies or defense companies where the going is very good and plus they need, I think, a lot of training in terms of AI and other tech-related skills. So are we approaching the PSU or government organizations for our training consumption?
If your question is, are we approaching PSUs and government organizations for our training offering?
Yes, sir.
Yeah. We do work with select PSUs. We typically do not have any government customers, and we prefer that we deal with private sector and large PSUs where the selection as well as purchase as well as payment processes match the agility and transparency that the private sector practices. And this, Ganeshji, you are familiar, you are a very old investor of NIIT. You know the difficulties that we have had in collecting our receivables. The good news is that we collected every penny. But bad news is it took us many, many years and many bucket loads of blood to get that out.
Yeah, okay, sir. I can understand that. So my second question is regarding our GNIIT offering. After, taking over IMNEO, which is mostly catering into student community and universities, is there any improvement in our sales uptick as far as GNIIT is concerned? I just want some clarification on that.
So yes, there is an uptick of interest in GNIIT students. Are we happy with where we are? No, we definitely want to grow faster. But we are seeing an increase in interest and an increase in registrations over the last 6 months in that space.
Yes, sir. My third question is regarding our other income, which is considerably low during this quarter. It is due to some mark-to-market losses. Do you expect some improvement in the quarters to come, or is there anything else to add to this?
I think this is market-driven. You understand banking and interest rates much better than any one of us do. We think there should be a correction in this quarter itself, in the quarter 3 itself.
Yeah.
Maybe Sanjeev, you have something more to say.
Yeah, so in any case, this is an accounting entry which is based on the mark-to-market impact on the mutual fund investment which has been made. So it is actually a notional impact based on the fair valuation of mark-to-market. So it will in any case get reversed, because in the past also we had some gain also similar in future, and there is a reverse trend, then this gain will also gain coming.
In any case, as you know, no cash change hands,
Right.
No money change hands. This is a book entry and it's just a technical entry.
Yeah.
Okay, sir. Thank you very much for the answers, and I wish you all the best for the future quarter. Thank you very much, sir.
Thank you.
Thank you.
Next question comes on the line of Harsh Yadav with Dolat Capital. Please go ahead.
Hi, I'm looking for more clarity on the growth outlook for FY26. Last quarter, you guided 15 to 20% overall and 5 to 10% organic growth for FY26. I may have missed it in the opening remarks.
Yeah.
I'll read it out again just to be sure that we are saying the right thing. So our guidance for Q3 is 15 to 18% growth, QOQ growth. YOY growth. And the Q3 margin will remain low single digit. For FY26, the YOY guidance is 15 to 20%. Right? And we will of course reassess again at the end of Q3. But that is the numbers that we are saying.
All right, thank you. That was it.
So in other words, the 15 to 20% guidance that you heard for the year was correct. We said that at the end of last quarter. We are continuing to say it at the end of this quarter.
Thank you.
Okay.
A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Faisal Hawa with HG Hawa. Please go ahead.
Sir, is there any thought within the company to take up very high-end courses which may cost very heavily, but these are skills which are very rare and where the demand is very high? Something like, designing the fabs of semiconductors where we could have some tie-ups with Taiwanese companies, or with cybersecurity, where we could have tie-ups with companies like Palo Alto, who could do a lot of outsourcing from India. And how many GCCs are we talking to at this point of time for, training their employees or supplying them with some employees?
Okay, so 4 questions.
Or even something to do with robotics. So at least the ticket size of our courses are much higher.
Are not higher.
Very much higher.
Are much higher. So, okay, so I think then I understood it the other way around. You are saying that the ticket size of our courses are high. Are we looking at lower end?
No.
That's what I understood also.
Yeah.
Okay.
I'm looking at higher.
Are we looking at higher? What you meant was, are we looking at higher than current courses which are higher end and get better, you get a better fee out of that?
Yes. Much higher fees, but they are connected to courses which are where the demand is very high. Yet no one is teaching these skills. 2 or 3 things which come to my mind immediately is designing fabs of semiconductors, or even cyber security for mobile phones, for enterprises, where almost no one is teaching it, and whoever is teaching it, also the courses are very much outdated.
Right. No, so I got your. And the second question which you had was sectors outside of IT, or maybe that's the same context in which we're looking at semiconductors. Correct? And then the third and the fourth question you had was? Okay, let's stay with these 2, if you remember your next one. So, go ahead, Pankaj.
So we are looking and evaluating courses all the time, right? And right now, we are evaluating and launching courses in AI space, which will be at the higher end. So it's like we would do these as a stack, where you can start at the lower end, and there's an option to go very specialized and higher end. But the specific examples you gave, they are niche opportunities and not really high in volume. Having said this, there are still opportunities that are worth looking at. Fab kind of design courses would also involve hardware. So those are things we are evaluating, but we don't have any that we are launching in the near future. But we are constantly evaluating those. In one of our subsidiaries, RPS, we do a lot of the higher end courses from OEMs. Right? So there are courses offered by OEM partners, which are available for individuals to do as well. And the schedule is on the RPS website. So anybody can sign up and attend a course from there. Those are higher end and typically higher average than the D2C courses that we sell on the NIIT website.
Okay, thanks a lot, sir.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question.
If there are no further questions, you can.
Yes, ladies and gentlemen, as there are no further questions, we have reached to the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you very much. I think we had a very active discussion and engaging discussion. As usual, your questions raise new opportunities and new options in our mind, and we respect each one of the questions that you asked, as well as some mind-opening questions. On behalf of all of us, we thank you for your participation, your continued questioning us, and your guidance, which helps us definitely chart out a clearer strategy for the future. So with this, in this busy result season. Thank you very much once again for joining us. We appreciate every minute that you spent with us. Thank you, and over to the operator.
Thank you. On behalf of NIIT Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.